Hello and welcome to Looking at the Markets with David Modell. We're going to talk about the TRIX indicator today. Not one of the better known ones, but I like it because it is super simple to use. Now, how you calculate it is not simple, but you don't need to know all the calculations. I think it's more important to know how to use it. Now, before I get started explaining the TRIX indicator, I just want to let you know that I do offer coaching for traders and investors when it comes to putting together a plan or understanding technical indicators or fundamentals, any of that stuff. I do offer coaching. If you're interested in the coaching, you can email me at davidmodell@gmail.com. So let's get into the TRIX indicator. Keep it smooth with the TRIX indicator. The TRIX indicator is a momentum indicator or trend indicator. It is calculated using moving averages. The TRIX indicator is triple smoothed, which means that we're taking a moving average of a moving average of a moving average. Now, you don't have to understand all the calculations I'm about to tell you, but it's okay to know them if you want to. So how do they get the TRIX number? Well, step one, they take the 15-period exponential moving average, or EMA, using closing prices of the candlesticks. And this is true whether you're using daily candlesticks or 1-minute candlesticks or 5-minute, whatever. This is the calculation regardless of the time frame of the candlesticks. So step one, take the 15-period exponential moving average. Step two, take the 15-period EMA of the result from step one. Step three, take the 15-period EMA of the result from step two. So you have a moving average of a moving average of a moving average. And so it's going to be very smooth and very rounded. The line is not going to be jagged. It's going to be smooth. And finally, step four, you take the 1-period percent change of step three. And step four is the TRIX. If you didn't understand all that, it's okay. It's just good to know what the calculations are if you want to. But more important is how you use the TRIX indicator. So here's how you might use it. And please understand that no indicator works all the time. None of these indicators that I talk about work 100% of the time. You have to make your own decisions, do your own research, know what you're doing before you do it. So here's how you might choose to use it. When the TRIX is above zero, the momentum is considered bullish. And when the TRIX is below zero, the momentum is considered bearish. So it's just telling you the overall trend or momentum. Is it trending upwards or downwards? That's kind of all it does. It's really simple. But there are other ways you can use it. You can use the TRIX indicator to spot divergences between the direction of the TRIX line and the direction of the candlesticks. Divergence meaning they're going in two different directions, and the TRIX line might be telling the truth, while the direction of the candlesticks might be lying to you, possibly. And so it's kind of like RSI divergences or stochastic line divergences. It's not really that different. So a bullish divergence is when the price makes a lower low, but the TRIX line is still trending upwards. So if you have the price trending downwards, but the TRIX line trending upwards, you might feel that the TRIX line is telling the truth and that it's still bullish. And conversely, a bearish divergence is when the price makes a higher high, but the TRIX line is still trending downwards. So it's just the opposite. That would be a bearish divergence. All right, so let's take a look at TradingView, and let's see what that looks like. And this is Apple stock. It's a daily candlestick chart, but again, you could use this on pretty much any time frame. It still calculates it in the same way. All right, and as you can see, the TRIX line pretty much follows the price action. I don't see a lot of divergences in this particular example, but if you do see one, you can certainly use that, and you might be led to believe, you might feel that the TRIX line is telling the truth. Not necessarily. Again, none of these things work 100% of the time. And as you can see here on TradingView, 0 is the midline, and supposedly, if it breaks above it or stays above it, that's bullish momentum, and if it breaks below it or stays below it, that could be considered bearish momentum. And here on TradingView, at least, the default look-back period is 18 periods. Okay? Pretty simple indicator. Couple of different ways you can use it, and that's your basic primer on using the tricks indicator. I hope this was helpful to you. And if you want to show some support, please give this a thumbs up right now on YouTube and subscribe to my channel if you haven't done that already. Go ahead and subscribe and hit that notification bell so you can get updated whenever I put out new videos. And also, if you or someone you know would like coaching for trading or investing, you can reach out to me by email at davidmodell@gmail.com. I appreciate all of your, watching my videos. Thanks so much for doing that. I really appreciate everybody, each and every one of you. Thanks a lot. I'll talk to you again soon.